Hi there, I'm Matt Ishbia, President and CEO of UWM, and this is 3 points. First point, FHFA's changes to the loan level price adjustment. So some big changes across the board for Fannie Mae, Freddie Mac loans. All GSE loans are getting more expensive in many situations. We already knew about the cash outs and the second homes and the high balance. They got it more expensive last year. And of course, the first time home buyers and some of those home ready, home possible loans got less expensive positively. Now there's some additional changes they're making to the whole LLPA framework. You know, across the board, LTVs, FICOs, they've added in a DTI adjuster. They've bucketed out more LTV buckets, you know, LTV below 30, and the FICO scores are more broken out. They've made some changes. Now, the overall changes look like it's going to get slightly more expensive across the board, not significantly. However, we understand what FHFA and Fannie and Freddie, everyone's trying to do is help the underserved, which I love it. We are part of that. Everyone's part of that. And there's some situations where the underserved, you know, 620 FICO, 97 LTV, actually got, you know, significantly better. So that's positive. However, at what cost? Who are we charging? We're charging the 75 LTV, 760 borrowers more than you were charging just last week. And so these changes are going to hurt some borrowers, help some borrowers. Do I love how they handled it? Not really, but I do understand what they're trying to do. Just hard to hurt some of these consumers that are doing things the right way to help some of those that maybe need a little extra help. So helping those that need help, we're all supportive of. Hurting some of those people, not as supportive of. But these changes are not going to be effective until May 1st when you deliver them to Fannie and Freddie May 1st. So you'll see them on the rate sheets probably in early March to start to affect pricing and impact it across the board. Second point, Wells Fargo backing out of the mortgage industry. So Wells Fargo has been known as the leader in the mortgage industry for years and years and years, until taking off the #1 spot by Rocket recently and obviously by UWM most recently. But Wells Fargo is a great company, done great things, is a big bank, been successful in the industry, but they're backing out of it. They're basically saying we're no longer, definitely on the correspondent side, and downsizing the retail side substantially. They're already pretty small relative to what they used to be, but now they're even saying more. So what does this mean? What is this signaling? Of course, the non-bank lenders, people that are focused on mortgages all day, every day, are continuing to win. Not only brokers, but all independent mortgage people that dominate the mortgage space. So focus is winning. Also, this does hurt the retail channel. Wells Fargo was a massive correspondent lender, so a lot of these retail lenders that would sell their loans to them, whether it was jumbo or other loans, are losing an outlet. That makes it harder. That drives more people towards the broker channel. All changes that are impacting the independent mortgage brokers and independent mortgage companies, these all have ties in and are affecting each other. So Wells Fargo, it wasn't an independent decision. They made a big decision. They're backing out of mortgage, and that changes the industry in a big way across the board. Third point, FHA Dual Compensation. So as the end of 2022, the Federal Housing Administration announced a rule change that will allow individuals to serve as both a real estate agent and mortgage loan originator for the FHA insured home sales. This is very similar to what conventional has allowed for years and years, and now FHA is allowing it too. So not a massive change one way or the other, not impacting business one way or the other, however, more aligned with what the rest of the industry has been doing. So good change across the board. We think it's good for originators that now can do FHA loans that way if they happen to be a real estate agent or connected in some way on the real estate side. Thanks for joining me. I'm Matt Ishbia, President and CEO of UWM, and that was 3 points.